He's back at it, ladies and gentlemen. Just when you thought it was just going to be a nice, simple day, Trump has gone to town with regards to these tariffs. Tonight's live, we're going to break it all down. We're going to talk about Elon and his wild behavior regarding this new political party that he wants to try and get into play. We're also going to look at these tariffs. Like, he is just not stopping at all. Today, the dollar itself started to climb up quite extensively against the euro. And when that happens, you normally think that, okay, maybe the stock market's going to go up as well because your dollar purchasing power is starting to increase. That's not the case. Today, we've seen the NASDAQ come down. The dollar is going up, which means what? That they could be doing one of two things. They're either coming out of safe havens of the euro and the yen and going into the dollar, or they're actually buying yen, selling it, and converting it into dollars with the intention of putting it back into the stock market later on, which means that if the market has corrected, then naturally we assume that they're going to try and move it back up again. If I'm honest with you, Trump's the only reason as to why the stock market won't continue to go up. With the indecisiveness of whether he extends a tariff and then equally adds more tariffs elsewhere. I mean, we knew it was going to happen, but looking at these tariffs, ladies and gentlemen, it's absolutely wild. Cryptocurrency, Bitcoin, still holding around that 108K region. We're going to break down some price action on Bitcoin this evening and then just make it I don't even know what to say. It's like they tell us we get an extension, happy days, stock market rallies. And then we add some more tariffs, stock market corrects. It's really starting to make it a little bit difficult to navigate whether this move to the upside is going to contain itself, or are investors actually thinking, you know what, now's the time to throw in the towel and let's just start pulling everything. Because if the dollar starts to go up just by itself, investors are getting pretty scared. And even though the dollar is absolutely dog, investors will always go to dollar. They always will. So let's break it down, ladies and gentlemen. Here we go. Good evening, good afternoon. Ahmed, what's good? Nice, relaxing day. All right, let's get with the program, gang. Here we go. Keep this one short and sweet. So stocks have taken a bit of a tumble to the downside, and primarily you've got to look at Tesla. Tesla is getting smacked left, right, and center. $68 billion in value after Elon says he's launching a political party. Why is this a problem? Because he's not focusing on the business. Going over into Tesla itself, I mean, look at NASDAQ taking a shoe bag right there. It's been a whipsaw day today. But going over into Tesla, you can see it's already down 6%, nearly 7%. It was actually lower than that. And you can see that investors, they're just not happy with the story of Tesla right now. They just think that if Elon's not focusing on Tesla, you've already got a reduction in the Cybertruck sales, which investors have naturally reacted to. You've got the beef with Donald Trump and Elon. And of course, the electronic vehicle mandate has been removed. And now that he wants to start his own political party, this guy's running a different agenda. But they say that when you have over $300 million liquidity as a person, you tend to not care about anything. You can actually do whatever you want. But when we look at Elon Musk, this guy's got more than $200 billion to his name. He wants to start a political party. Well, why not? Now, just look at this, right? This right here, okay, is Donald Trump's Truth Social platform. 10 million people follow this account, which is quite a joke, really, given that everything that he says goes on here. So naturally, everyone and their friends should be looking at what he's doing on this platform. In front of you are the letters that he's been sending out to all the nations. This one right here, he's been sent it out to the King of Thailand, Bangkok, and says, whatever you're going to do with the tariffs, we're going to add more on top of it. He's given them a 36% charge on their tariff. So 36%, happy days. Go to the next one. You've got here, Thailand, Bangkok, Prime Minister of Bangkok right there. Same story. And then we've got another one over here. Where is it? Got this one right there. What we got here? Oh, come on then. Okay, so he's talking to the Prime Minister of Cambodia. Same story, 36% right there. Okay, then fine. So basically, he sent out these 12 letters, okay? And he signed all of them, 35% right there for the Republic of Serbia. There you go. So anything they try to add on to it, he's just going to add more. In other words, it says here, for any reason you decide to raise your tariffs, then whatever the number you choose to raise them by will be added onto the 35% that we charge. What the hell? And that is across those 12 letters. So I'll read it out to you here. So Bosnia will receive a 30% tariff from the 1st of August. Indonesia, 32% tariff from the 1st of August. Bangladesh will receive 35%. Serbia, 35%. Cambodia, 36%. Thailand will receive another 36% on top. And if anything that they decide to do in terms of retaliating to that, he's just going to add that on top of what they are already getting tariffed on. It's just absolutely wild what this guy is trying to do. He's either trying to rip the US economy apart, or should I say, rip the dollar value, okay? Because investors won't like this. They know it's going to slow down trade. It's going to influence inflation. And this is a problem. But this is good news for Bitcoin when you think about it, because technically Bitcoin should not be subject to it. It's deemed as the hedge against inflation. And we are getting inflationary. It's there, right there. And even when we look at it, everyone is just losing their minds about it. So Japan, South Korea, and South Africa, all starting in August, they're all getting their 25% tariffs put on top. So it's just now you've got to say to yourself, what can we do now as investors? Well, you've got to look at where everything is right now. If the stock market is currently trading at these significant highs, because it's not too bad, it is at the all-time high ranges, and it hasn't broken any key areas. If you look at this area here, it's not broken this 22,580. And even if it were to come and correct all the way down to 21,500, it'd still be deemed as a valid bull run. It's just correcting to the downside. But what you've got to remember as well is you've got a Fed pivot coming into play. And that's when things start to get a little bit interesting. Interest rates. So right now, it's all about the tariffs. What we're going into is the change in monetary policy, and that will always move the markets. Now, let me just bring this up for you right here just to show you where we are with regards to investors' approach on the interest rates. So what the hell? What the hell's going on here? There we go. Right. So there is a 95.3% chance that the rates this July, the FOMC meeting, they're keeping it at 4.25, 4.5%. Were they not talking about an interest rate cut in July? Doesn't look like it, ladies and gentlemen. Going into September, things are looking a little bit interesting there too. What are you seeing? Come on. September. There we go. 4 to 4.25. 62% are betting that the idea is they're going to get a rate cut, but 34% still believe that 4.25, 4.5% is still the range that we're going to be getting. That really needs to be much lower for us to assume that we're going to get a rate cut. But then when you've got these tariffs coming into play and how these tariffs are going to be exercised, the Fed is only going to think that we're going into a tariff inflation event. Now, with these tariffs themselves, if Cambodia come back or Bosnia or anyone comes back and say, let's have a deal, that's why he's extended it to August, then it may not be 36%. It may not be 35%. It may be lower than that. Naturally, the market's going to react, but fundamentally, you're still going to have a tariff on products, and Trump doesn't care. Now, who else does care, though? The bonds market. In front of you, the bonds are now pulling back. We've had a little bit of success lately where Trump hasn't been really talking too much about the tariffs, and the market has been moving up because we were focusing on Israel and Iran. Now the bonds are starting to come down again. Equally, the yields are starting to climb up again. And when the yields start to climb up, investors are going to be demanding more for rates of return on holding US debt. Still got high interest rates. So that means what? Well, I ain't going to be going into dollars right now, knowing that the interest rates are still high. If the expectation of interest rates is still going to stay higher for longer, then why should I buy at these rates? I'm going to wait until the 2-year goes above the 2.5. Where are we at with the 2-year? Here we go. Wait for it to go above the 3.8% region. I want to get 4% on the yields of 2-year. Why? Because the future doesn't look too bright. So if the 2-year gives me more of a rate of return and holding a bond for less period of time and still earning more, then I'm going to go over to that. So when the 2-year will actually start to outperform the 10-year, that's when you get yield inversion. That means you're going into a recession. And whenever the yield curve inverts, in other words, you earn more money holding a bond for a less duration of time tells you investors aren't liking the bigger picture. So they're not going to lock their money up for longer periods of time. They're going to get it into smaller, shorter term dated securities like the 2-year bond and leave their money there and keep it in there just for a short period of time, which means the US government doesn't get access to capital for longer periods of time to make money on it. That's a problem for the marketplace. But when we look at everything across the board, how many of you are of the idea that this is the all-time high? This is when the market starts to pull back. This is when we do get a decent correction. Smart money, dumb money itself, as we saw earlier on, hasn't yet been updated, but it's at 0.36. Once we start hitting this black line right here, then that is when the market, in my opinion, is going to turn, because smart money is selling as everything is rising. Going over into the volume for the NASDAQ itself, just go to the daily and have a look at where we are with that. You can see here that NASDAQ has pulled back for the day. Come on, here we go. Volume is lower, is below average, but it's a negative trading day as well. So that's not a good sign. We really need to see the NASDAQ showing volume consistency to the upside and above average to suggest the idea of a bull run. Remember, when you're looking at the market going higher, if the volume's not present, there's no point. You're just watching price just floating upwards, and all it takes is one event to just rip it, okay? Now, going into Bitcoin, let's just go and dive into that bad boy right now. So, bit of a choppy day with Bitcoin. I'm not going to lie to you. Look at it. It's been absolutely horrible. I was favoring longs today on Bitcoin on the idea that Trump putting the extension out for the actual tariffs was good news. But then what does he do? Throws out all these tariffs across other nations, which the market naturally reacted to. So they then ended up going into safe havens such as the dollar. Going over into it, you can see the dollar has been climbing up. Look at that. It's making a nice reversal from these lows. It has come down to the sub 95 region, and it looks like it's wanting to climb back up. The euro actually coming into flavor again with a minus 0.55% drop to the downside. Maybe euro is going to start pulling back because investors are now going to start going into dollars. But remember, the one big beautiful bill and tariffs are naturally going to weaken the US dollar. But Trump is not bothered about that. He's looking at the bigger picture of things. Even with his view of a bigger picture, he's going to be adding $3.5 trillion to the US deficit. So where does that leave us? Well, hold on. You go back to the first cabinet meeting when he came into when the administration came in, Bessent did say that we've increased the debt ceiling for over the next 2 years, so we don't have to worry about that. He said that in that meeting. So go and watch the first cabinet meeting. Bessent said that. No one said a thing about it. And Bessent was pretty clear about it as well. Going into it all, guys, what you do need to try and get into your mind is looking at the way foreign exchange is going to behave. That's going to dictate if the stock market's going to go up. That's going to dictate if Bitcoin goes up. Quite frankly, Bitcoin is a little bit of a dark horse in the sense where the ETF is going up. We're seeing accumulation in there. But Bitcoin, because of its volatility, it can easily come down, to 105. It can easily come down to 103, and it would still be deemed as a valid bull run in Bitcoin. It's just because it's such a high risk asset, the fluctuations in its price tends to put investors off at keeping money locked into Bitcoin. Let me explain. What you got right here is the order flow of Bitcoin. If you're not using order flow, then you're going to be missing out on key elements to it. So right here, we have got an order right there for about, they tried to trigger it earlier on. 22.9 million was traded with the initial amount at 32.3 million. Okay. So they're at the 107,500. There is clearly interest in that zone. One could make the assumption that that is a point where Bitcoin is going to grab investors' attention, and they're starting to put quite significant amounts there. So if we assume that this is going to be a short-term low, then we can only make the assumption that Bitcoin's going to try and make a move back up again. Problem is, there's not really that many offers. And that's the problem that I've got. There's not many people trying to come in and sell the Bitcoin. And if you look closely, they haven't been in the book for too long. How do you identify that? Look at where they finish. If you look at these areas here, so let's look at this. This has been in for 4 hours, okay? This one has been in for 8 hours. What we need is a lot of these. You see these ones right here? That's been there for 4 days. He wants to sell that Bitcoin at 110,000. He wants to sell that Bitcoin, okay? And the more orders that we have that are sitting longer in the book, the more there is commitment for the market to start navigating to those areas, because that's where the liquidity resides. Remember, the exchange's obligation to the investor is, I make sure that there is someone matched to your order. In order for me to do that, I've got to make sure that Mr. Market Maker is satisfying your requirements of taking a position. And if there's lots of you all in one space, I'm going to do my hardest to make sure that you get your order filled at speed. Equally, the other guy gets his order filled at speed as well. And when we don't see enough liquidity building around a specific zone, then we could make the assumption that Bitcoin is either going to go up or down. That's the truth. And until it starts to find the true traction and goes in the direction of where investors' heads are at in belief of where Bitcoin should be, then you are going to see, for example, if there's a lot of expectation that Bitcoin's going to go up, lots of people are going to come into the book and try and sell. But you can see, zoom out, look, you don't really have that many people selling. If you look closely, you've got gaps. Look, there's little gaps inside of this order flow. Little gaps. And if there's little gaps, it means that it's dispersed. There's no cluster of people. All right, you can see that there's a cluster of orders right here, but that's really close to price right now. Bitcoin only needs to go up to 108,312. I mean, where are we? So only needs to move up to here. 108,312. It needs to go right there. That is such a small move from the current price to this area here. That is nothing. What we need to see is we need to see loads of these going all the way up. And equally, we want to see a lot of bids coming in to then suggest that there is support down there, and that if the price does come down, it's going to reverse aggressively from it because of the amount of orders for people buying Bitcoin in that range. Okay, so that's something you really want to take into consideration when you are looking at Bitcoin. Going back to what I said about foreign exchange, Euro against the US dollar has capped out at the 1.1800 region. This is important, okay? Because Euro has had a very good run and it hasn't stopped. And if we look at it like this, some of you technical analysts will look at this and say, okay, let's draw a line right here. It's broken out from that point. We take another line right here and it hasn't yet broken out from there. The consolidation could be as long as it needs to be. But if this tariff story really has investors concerned, they are naturally going to start going back into the dollar, and we could end up getting a dollar rally, okay? But it won't be for long. That's the thing. And if we get a dollar rally, that means Euro goes down, yen goes down, but at the same time, when the yen goes down, investors could be exercising the carry. And the carry trade is simple. You take a low-yielding asset such as the yen, buy it, then sell it, and convert it into another yielding asset, low yielding asset, such as the dollar, and then get those dollars and put them to work. Okay? That could be something that we get right now. So anything that we see correcting backwards in the sense of the NASDAQ pulling back, if the NASDAQ can sustain itself inside of this range and then continue to mark up again, then we would then be of the understanding that the carry trade is being applied. Why? Because if the yen's going down, it means they're selling yen and converting it to dollars. What are you going to do next with your dollars? You're going to go put them to work. And that's what we're looking for here. Today, the dollar against, with regards to the NASDAQ, if you look at last week, when NASDAQ was going up, dollar was also going up. Okay? And that's where dollar's been finding its feet. Okay? Go back and look at the times when dollar climbs up, the NASDAQ usually climbs up. The euro comes down, the yen comes down. All right? And when you see that relationship, you think, okay, then they're coming out of European stock or selling their euros because they can get lots of dollars right now. They can get loads of dollars against the back of a strong euro. And then they can get those euros, convert them to dollars, get those dollars and put them into the stock market. But because we're going into a change of monetary policy right now, we've got a little bit of a problem. Yeah, they may be converting yen into dollars and then getting those dollars to put them in the stock market. But if we're not seeing the stock market going up and we're seeing the dollar going up by itself, and the bonds market is not going up either off the back of a strong dollar, and gold itself is not even doing anything, and that looks like it's starting to pull back, then it only means that dollar is now becoming the safe haven. And if dollar becomes a safe haven, that will just send your dollar flying back up. Then we'll get to a level of appreciation on the dollar where investors will be like, you know what? let's just start the whole process again. Let's start selling our dollars, go and buy some euros on the cheap, off the back of the strong dollar. Then we can start buying European stock with our cheap euros right now. And then we can inflate the value of our stocks in the European markets. That's what you've got to look at when it comes to foreign exchange. When it comes to Bitcoin, Bitcoin is a little bit subject to the way the stock market's going to move. It's not an entity to itself. Yes, there is accumulation in Bitcoin, but the problem is it's subject to where big boys are going to commit, in the sense where they already know Bitcoin is a high risk. They're not going to take on that risk. If they're not going to buy Nvidia stock, why on earth would they be getting involved in Bitcoin? And Nvidia is the most valuable company in the world. So if they're pulling out of Nvidia, you're damn right going to be seeing them pulling out of Bitcoin in terms of the ETF. But if the ETF isn't showing that, then that tells us they're shorting Bitcoin and still buying the ETF because it's cheap enough to do so. That's what you got to look at. Okay. Any questions? Bad day to trade. Yeah, no, I don't. Yeah, select the daily open for my ADR. Yes, that's correct. 25% tariffs on Japan will affect its inflation, thus meaning they will have to cut rates. Japan carry trade unwind. No. No. Okay, so listen, when it comes to the yen, right? If they are going to increase, if they're going to put tariffs on the Japanese yen, the Japanese in principle have to do what? They have to encourage investment, okay? Because if it's more expensive to do business, then naturally it's going to hurt their economy. So how do you stimulate the economy? You have to offer higher rates of return. Now remember, the yen itself is at what? Less than 0.5% on the interest rates. So it's cheap. So naturally, if they increase their interest rates, foreign investors will be like, hey, I can get me some nice rates of return on a Japanese yen. It's already deflated and smacked down, so I may as well do that. So if they're offering 0.75% on an interest rate, awesome. I'm going to go get myself some yield. That yield, it means I'm going to go and buy myself some Japanese bonds because they're offering higher rates of return for holding Japanese debt. So if they increase their interest rates to retaliate against Donald Trump and his tariffs, because look, this is where the Japanese get a little bit concerned. When dollar yen starts to climb up, now it's not going into forex intervention ranges just yet. Let me show you this chart in a second. Let me just bring it up for you. Come on, here we go. So if I type in Japan forex, what you're going to see here is a chart that shows you when the Japanese intervene. Okay. And I said it, man. Donald Trump, I don't think he cares about Japan in terms of the tariffs. He's more concerned about forex manipulation. Now, in front of you here, you've got these blue lines. These blue lines is when the Japanese step in and buy a ton load of dollars to actually impact the US dollar against the Japanese yen. The Japanese yen, or Bank of Japan, they can't afford to have a strong dollar. It hurts their trade when the dollar is trading strongly against the yen, okay? So once the dollar yen goes to around the 150 mark, okay, that's when the Bank of Japan start to pay attention and say, you know what, let's go and buy ourselves some dollars so that we can sell it back into yen, which in principle would then deflate the value of USD JPY, bring it down, and then the yen starts to come back up. But the only ace card that the Japanese can actually bring to Donald Trump is if they increase their interest rates. Upon increasing their interest rates, they force the unwind of the carry trade, which means that the dollar ends up going down because everyone is shit scared about the cost of doing business with the carry from before. Okay? Because remember, when you doing a carry trade, you're borrowing yen. And when you get that yen, you convert it into dollars. But if you see that the interest rate has gone up on the Japanese yen, and you're already caught up with risk in the stock market from borrowed yen because you converted it into dollars and put those dollars to work in the stock market, you then say to yourself, oh my days, what am I going to do? That rate that I'm being charged has now gone up and I'm borrowing in the millions, like look, hundreds and hundreds of millions now. I'm at risk right now. Well, I better start selling my stock. And what a perfect time to sell your stock. It's at all-time highs. So you sell your stock, you get your dollars, dollar in value increases, and then get rid of your dollars back into yen, the yen increases. And that would only happen if they increase the interest rates. So that could be an event that we could be going into, ladies and gentlemen. Can the Bank of England cut rates, please? Oh. Yeah, the Bank of England's rates, they're still up there. They're second place with the US. 4.25, where are we at? Hold on. There you go, 4.25% right there. Right there. So I don't think they'll go too far. I think they'll sit at the 4 mark, but not yet. Not until the US cuts, in my opinion. Problem is we are not taking into consideration the majority of trading is done by AI. We're cooked. Yeah, well, never mind. Tino is using boy band spray on his hair, hence it does not move at all. Boy bands spray. You can obviously speak from experience, but what's boy band spray? I don't use hairspray. This is wax, man. Wax. Who remembers Dax? Yeah? Look at the Swiss franc rate. Yeah, it's done. Yeah, that is pretty much zero. Nobody knows what the hell is going on. Money is moving all over the damn place. This is true. Oh, God, we're going to talk about XRP. Anyways, ladies and gentlemen, where we at? Bitcoin making a nice little reversal. Okay, then. Cool. As you say, buying spot, shorting Bitcoin, delta neutral. This is true. This is what we're doing. This is why Bitcoin is trading sideways. Tonight, I'm going to be doing a market watch, okay, where I project out what I expect from Bitcoin in the near future. So actually for the rest of the week. And that's going to be with the euro, with gold, with NASDAQ, Bitcoin, Ethereum, Solana. And that's for the platinum members. So if you want to get involved in that, it's ideally better for anyone that does swing trading. I give out projections for those guys and we wait a whole week to see how the projections play out. That's what I'm going to be doing this evening to get that over to the guys. I usually do it on a Sunday, but I was obviously traveling. But I'm going to get that out to them. So platinum members, if you're watching this, just keep an eye out on your notifications because I'm going to get that sent over to you soon. Okay? Tino loves trading that much, even wears DAX. Yes, German stock market, I know. Tino, is there ever a situation where the big, beautiful bill won't benefit Bitcoin? Well, it does benefit Bitcoin. Because the big, beautiful bill is devaluing the dollar. It's going to make the dollar weaker. But the problem is, are investors going to go over to Bitcoin? Because if your dollar is losing its value, is Wall Street going to go and take on higher risk by going into Bitcoin? We love the idea of Bitcoin going up. That's all we care about. But you've got to consider, what reasons do investors have to take on high risk right now? They're not even buying US debt. And that is a low risk investment. So why on earth would they go over to Bitcoin? We would go over to Bitcoin because we're like, yeah, Bitcoin. That's what you got to say to yourself. If they're turning Bitcoin away and going into the dollar, it just shows you that Wall Street mentality is still there and it will always be there. That's the thing. Pin to the top of the chat is the way you join the platinum, my friend. Do we expect USD to go up? What about Circle? Funny you should say that. Let's go and have a look at Circle for a split second. Where are you, Circle? Here we go. So Circle has done... There you go, man. I told you. I said it to you guys. Sub 200 mark. It's a nice buy. And it's holding out very, very well. Brilliant. 44 million shares. Absolutely awesome. You know, I'm most definitely looking for this to go easy $500 a share. And as an IPO, it's holding out very well. And there's lots of strength with that as well. So that is a good opportunity right there. But be careful, man. Be careful. Because if we look at the logic right now, okay, and we look at this and we understand its business model, will this be a recession-proof or a, how can I put it? An economic downturn proof stock? Think about it. What are they going to be doing? They're going to be issuing stable coins. Okay. So when the economy is doing bad or cryptocurrency is starting to pull back, where do investors put their money? They sell their Bitcoin and go sit in what? They go sit in USDT. Now you've got the alternative of USDC. So if the economy starts to turn, Bitcoin starting to go down, Circle could be the hedge for anyone that might have Bitcoin and you want to start taking advantage of Circle going up because they're going to be issuing stable coins. And the purpose of the stable coin is to do whatever they need to do with the stable coin. Investors are naturally going to sell their Bitcoin and put it into risk off currency, which would be USDT or USDC. That would then, of course, keep Circle in business, keep on making that USDC, and thus increasing their share price because of the utility is being consumed all the time. Could be an alternative, in my opinion. So that's just me just spitballing with you all right now. Okay. No, BlackRock will sell off at least 25% of their Bitcoin assets, looking at 80, 90, then we'll buy back. Okay. Any view up on gold? Potential upside as tariffs news heating up again and the daily candle rejected hard. Okay, listen. So what you've got to understand with the tariffs and gold is they are designed to weaken the dollar. Naturally, gold will then start to move up, but investors aren't really plowing into gold right now because the main economies that we're talking about is China. Okay. China tariffs, Eurozone tariffs, and that's pretty much it because the Eurozone and China, they consume the most from the US and the US consumes the most from China and, of course, a bit from the Euro as well. So once we've seen the impact of the Euro deal, that's what we're looking for, the European deal. Once we get that, because you notice they're not talking about it. They're just throwing Japan, South Korea, South Africa. Like these are smaller economies, all right? Minus Japan, but they're smaller economies like Bosnia, Cambodia. If they're seeing what's going on over there, they're going to more than likely assume the same thing's going to be the case with the euro. And when it comes to the euro deal, that's going to be absolutely nuts, in my opinion, ladies and gentlemen. If they don't get the right deal, if the eurozone feel like they're getting mugged off, it's going to cause chaos in terms of the dollar and the euro, in my opinion. Big war announcement soon, maybe. What is Sydney usually doing? Continues the direction of New York or reverses it? It all depends. Look at where you're coming from. Always ask yourself, where am I coming from? I'm coming from a high, okay? And the NASDAQ itself is now starting to try and trail over. Remember, guys, you've got a really light week this week. There's nothing happening. Tomorrow, it's empty. And then you've got FOMC minutes, unemployment claims, and GDP for the pound. So it's pretty dead this week, if I'm honest with you. Nothing really happening. Good evening from Crypto Monkey. What's going on? Other than that, ladies and gentlemen, are we cool with that? Yeah, they are struggling with the EU. Most definitely. Most definitely. Yeah. The problem is, guys, with regards to the tariffs themselves, the data that the Fed is looking for, if I'm frank with you, this is where I think the market's going to end up. Fed pivot, crash. Simple. That's as simple as it gets. All the extremes are coming into play. Yields are basing out and they're not going down. They just come down, but they equally reverse back up because investor sentiment is changing continuously. And if you're not seeing the trajectory of the yields showing a consistent downwards move, tells you that their expectation of the future is very, very limited. So those yields will naturally keep on going up. Trump is increasing the demand for investors to take on risk. And that means we want to earn more on the yield for buying your US debt. And Trump's increasing tariffs and doing all of that, causing tension overseas and everywhere. Investors are going to say, all right, you can do all of that, but we're going to seek a higher rate of return from you. We're going to demand it. The yields will then shoot up. They won't buy any US bonds. They'll rather go and pick up Japanese and European bonds. You go and have a look at the European bonds, short-term dated securities on the euro. Those things are flying up, man. They want euro bonds. That's why euro is trading so strong. Forget what it did today. It's doing very, very well. When Fed pivot? The Fed pivot, in my opinion, ladies and gentlemen, is going to work like this. The next reading of inflation will either trigger the Fed to act at speed or delay it for longer periods of time. Because if you look at October's meeting, okay, Look at the expectation of rates. We're still stuck in the 4 to 4.25. If you look at the dot plot chart, look at this. This dot plot chart itself shows you, wait, hold on. Whoa, whoa, whoa. There we are. No. Let's go to the chart. The dot plot chart itself shows you where the Fed members themselves believe the interest rate should be. Okay. Now you can see here, 2025, we're stuck up there. There's a majority right here that believe it should be below 4.4%. Then you got another bit of a majority up here between the 4 and 4.25 region itself. Okay. Then as we go down into 2026, there seems to be an even distribution between 3.25, 4. Okay. And then again, we're stuck at this 3.5 region. So, and then down to in the longer run, they expect the interest rates to end up at around 3%. That's still high. That is still high in my opinion, you know? But I think we're going to be holding out on these interest rates for longer periods of time. I don't think they would ever hike them. If they were to increase the interest rates, Jesus, man, inflation would have to come in significantly higher because we're stuck in that 2% region in the sense of 2.4, 2.5, okay, 2.3, 2.4, all right? If inflation goes up, because we're waiting for tariffs, if inflation does go up, there could be a slim chance, but it's there, that the interest rates could be increased if inflation ends up getting out of control. So if we get a reading and inflation shoots up to like 3.5%, granted, that would then guarantee an interest rate hike or just keep the rates at the same level that they are for much longer periods of time. That would kill your confidence in the dollar. It would just destroy it, in my opinion. Here we go. I watch your videos daily. The only question that arises in my mind is, I want to understand, how do you specifically understand where is the money going and where it's going to continue this week? You've got to understand I start off every single day by reading articles. But what do I actually read? I just read the titles. I don't need to read anything else. Nothing else. I look at the title and say, stocks sink, Trump tariffs, dollar boost. Finished. What does that tell me? Stocks have dropped. That means yields are up. Okay? Trump's tariffs, I know what the story is with Trump. Okay? He's obviously doing something bad for the tariff, for the stock market, because he's coming out with some changes in the tariffs. Dollar starts to go up. But when the dollar starts to go up, that's a problem. Because if the dollar goes up, but the stocks are sinking, it means that investors are seeking a safe haven of the dollar. That tells me yen and euro are going down. Equally, gold is going down. I just look at the titles because I've done the work. I've trained my mind to understand what I can expect from the day. Okay? Doesn't mean that I just read this title and I can easily project where the market's going to go. There's a little bit more information to that. We've got to understand, why is it when the euro goes up, the stock market of the NASDAQ goes down? We've been getting that transition. Why? Because investors are then selling their dollars and going into euro and buying European stock. So when the euro's going up and the European stock market's going up and the NASDAQ's going down, tells me investors are actually piling into the euro. Alternatively, if I think that that's going to be the case, I need to back that up. What are the European bonds doing? If the European bonds are trading positively and the longer term dated securities of the euro are trading better, that tells me investors are not just taking on low risk for the euro, but they're confident in the euro. That means they're confident in the stock market of the euro. Euro goes up. So in my head, I'm thinking, okay, then if the bond market for the US is dog shit, then I can only assume that other bond markets are going to do well. I'll start buying Japanese stocks. I'll start buying European stocks. Why do you think Warren Buffett has sold everything and started to go into Japanese markets? He obviously understands that the dollar and the stock market itself is so overvalued. Let's start going elsewhere. Interest rates are low. I can borrow loads of yen. Okay? Their bonds are cheap. They generate good yield in relation to the amount of yen that you buy. And Buffett is sat on $360 billion worth of cash. So he's got to put it to work. When that's how I navigate the marketplace. And you got to understand, euro has become a safe haven. Never was a safe haven. It's become a safe haven. And when the euro's going up and the yen's going up, and the stock market's going down, it tells you it's becoming a safe haven. So I navigate that. I can even look at Aussie yen. If I want to understand if Aussie yen's going up, and when Aussie yen goes up, it means that there is a carry trade coming into play. Aussie yen goes up, the stock market goes up, because they'll be using Aussie dollars to go and buy stock. Take on risk. When Aussie yen goes down, stock market goes down. What's Aussie yen doing? Aussie yen has been trading negative. So is the NASDAQ. But because Aussie yen is holding out at this point, could suggest that the NASDAQ could go up if Aussie yen decides to continue higher. So that's how I do it. And like, even gold as well. Like, it's all over the place. Even with Tesla, even with stocks, you got small cap and large cap rotation. When the small caps are outperforming the large caps, it tells you that investors are looking for shorter term gains. They're not looking for longer term. They're looking for shorter term. You want to see large caps outperforming the small caps because investors are happy to buy bigger stocks, more expensive, and hold it for longer periods of time. That sustains sentiment. That sustains the idea that the future's looking good. That means more money is being locked into the market. That means stock prices go up. So it's not as simple, just look at a chart and think everything's going to go in one direction. No. There's so much more behind it. I can even go even further into it and start looking at the implied rate differential as well. That's going to help me understand where investors' heads are at. So if I look at the euro, right now. So wait for it. Here we go, and I'll leave this with you. Huh? What are you doing? No. Come on. Do this. Come on. My days, my head is fried. Come on, CME. What an absolute joke. Like the stream, ladies and gentlemen. It's free to do whilst this thing takes absolutely... Here we go. Right. So, in front of you... Oh, they reset it. Bloody hell. All right. So, in front of you, I normally get these figures here. And it says, what is the implied rate differential? If I see for the euro that the implied rate differential... Hold on, just click August. If I see that the rate for the euro over a 7-day period is showing a decent return, okay, or a high rate of return, then I naturally assume that the euro is going to climb up, because you've seen me do this where we've looked at this in the past and we've said, okay, the euro has a 14.6% rate of return, okay, implied rate differential, sorry, and the Japanese yen has a 35 or 40% implied rate differential. Tells me that over the next 7 days, investors can lock in that implied rate differential based on the asset of holding the euro against the dollar or the yen against the dollar. So then I look at that and I say, okay, for the next 7 days, they could exploit that. I then go to the chart of the euro and say to myself, okay, if the implied rate differential is saying that there is a benefit to be gained over the next 7 days and they're going to get 14.5%, for example, I look at euro's price action and I say, okay, is that being replicated? I then look at it and say, okay, imagine if they're being offered 14.5% at this point right here, and there's a green vector candle right there. I naturally assume that price is going to climb off the back of the idea that the rate is offering investors a decent return. So for the next 7 days, I could assume a bias of going long on the euro based on that information, but I don't just use that information. See what I'm saying? So that's the roundabout way of doing things. Anyways, why didn't last year's Fed pivot cause a stick in the market correction? I'll tell you why. Because investors were fighting against the Fed. And they kept on saying, don't fight the Fed, don't fight the Fed. Plus, the actual pivot itself was not great enough to grant the idea of investors being concerned about it. Okay? It wasn't a great enough pivot. We need to see a decent pivot on the Fed. And I think this time round, this pivot is going to be the one that actually rocks the market because of where we are. We're at all-time highs. Before, we weren't really at all-time highs. We weren't. We were just below it. We were not really claimed it. And then after the pivot, they pulled back a little bit. And then they went on to make more new all-time highs. Now we're getting to a point where we're going to see the pivot coming into play at all-time highs. And that's what's going to cause the market to pull back. So could you tell how we can figure out the difference between it as it's being traded for a safe haven, or is it generally being interested by investors? What's that? So could you tell how we do figure out the difference between it? I don't know what you're talking, what asset class are you talking about? I said I'd keep this live short and sweet. Sorry, ladies and gentlemen. Mad love and respect. And I'll be tuning into you all tomorrow, man. Sorry the live's so long. Jesus. Anyways. We'll back into it tomorrow. Peace.